Welcome to the Renews podcast with me, Stephen Dunn.
I have absolute belief that a decade from now, we will have high levels of activity in deep water offshore wind. I hope that 4 years from now, we're able to look back and see the formulation of a national champion that the country can be proud of.
I'm here with Dan McGrail, the Chief Executive of GB Energy. Dan, you're very welcome to the podcast.
Yeah, I'm delighted to be on with you.
So we're sitting down a week or so after you published the GB Energy strategy plan. It sets out the plan to be a developer, investor, support to the supply chain as well. You know, before we get into the nitty gritty of it, as you know, Dan, it's a tough time in the industry. We're seeing job losses, we're seeing developers walk away from projects, we're seeing supply chain companies, refuse investment opportunities. It's not a great time, is it, to be coming to the sector with, £5+ billion of money to invest?
I don't know. First of all, I understand that in some ways what the sector is feeling, and speaking in some ways about the energy sector at large, but actually bringing it into renewables and offshore renewables, is I think we're seeing the kind of ripple effect, the concentric circles of a couple of auctions which didn't deliver the outcomes that we wanted as an industry. So the work right now is relatively low. But actually, if you look at the bigger picture, and I think this is what we've tried to do in the strategy, is to look at the fact that, first of all, if the policy environment, there have been few times when the policy environment for renewables have been as favourable, at least the intent is very strong. And all of the messages from government have been very clear about, we need to add energy capacity in all sorts of different forms, lots of renewables, but, new nuclear, future expansion of CCUS and all of these various different technologies. So the investment hypothesis remains fundamentally strong. And if you look even further afield than the UK, investment in renewables continues to outpace investment in oil and gas. I think it was roughly double last year. So, the overarching macro environment should be a favourable one, even though there are relatively short-term issues. And those short-term things are very real, and they do affect people's jobs, and we need to be mindful and cognizant of that. But, the fundamental premise of investing in renewables as a growth vector is a good one. And I think that will continue to be the case into the future.
One of the things when you read the strategy document that's quite interesting is GB Energy's appetite for risk. There's a couple of mentions in the strategy document about investing in areas where the market won't, or investing in projects that wouldn't otherwise get built. At the moment, we're seeing experienced developers and OEMs and supply chain companies walk away from projects, investments, factories, etc. So I'm really interested to know what GB Energy's risk appetite is and why you would feel comfortable, say, going and investing in a project or something that wouldn't otherwise get built by the market.
Well, let me start that answer by contextualising the shape of the strategy a little bit. I mean, we worked really hard to find a shape for the business which balances a number of different trade-offs. As a publicly owned energy company, which is, first of all, part of what we're trying to do is to match the capital that we're trying to invest with the ambition that we have as a country, whether that's ambition for deployment or whether it's ambition for building intellectual property and technology know-how and building supply chains out, where that ambition is high, but acknowledging that the private sector capital isn't flowing at the speed that we want. And that's the space that a publicly owned company should play in, really, and should prioritise. But even within that, there's a balance that you have to strike between, how fast can we do things? So, part of the intent on having, a more, let's say, IPP style model onshore within, pretty tried and tested technologies, but focused on public land. That's about having some pace, but also balancing risk in the portfolio. Also looking at things like local and community energy, so we can really drive public ownership into the sector, community ownership, which we think is something that can make a real impact. Whilst we also look at something like offshore and deeper water offshore, which objectively all of the long-range targets and ambitions, if you look at the Committee on Climate Change's 7th carbon budgets, I think it's 88 gigawatts of offshore that we need. Objectively, we won't be able to do that in shallow waters. So we're trying to anticipate the need of the market, anticipate the future, and that is riskier. But also it's risk within a frame of look, we within fixed bottom offshore we did scaling up before. We worked against the voices that said this won't ever get to cost parity or won't get down to the wholesale price. We worked against those voices and used innovation and regulation to drive the industry to the space where we wanted it to be. So we should have, I think, as a country, as an industry, a degree of confidence in our ability to overcome challenges. And I think we're setting out a plan which balances off from a business perspective various different risks, drives at job creation, drives at public ownership, and tries to manage pace within all of that.
We're at the Offshore Renewable Energy Catapults Offshore Wind Spotlight event, so I'd like to focus on offshore wind. Could you put a bit more colour, Dan, around the strategy document and what it sets out as the plan for offshore wind? I think it talks about being an investor into equity stakes, less so about a developer of greenfield sites. Could you tell us a little bit more about what the specific plan is in offshore wind, and also clarify what deep water means? Is there a room for fixed there, or is it all floating?
So okay, let's break that down a little bit. First of all, I believe quite strongly that, and I've alluded to in my last answer, that we as a country should invest as much effort in learning from success as we do in learning from things that didn't go well. And our story on fixed bottom offshore wind is one of staged development into something. It's 25 years this week since the Blythe project was built, which is a great milestone. But at that point 25 years ago, few would have believed that we'd get to the point now where offshore wind is objectively planned to be the backbone of the energy system in the future. So we went through a test and demonstration phase. We went through a commercialization phase with round 2. Those were both based on ROCs, and then we went into an industrialization phase with round 3, which was majority of that was based on CFDs. And we went through a journey there which drove cost out, it localized innovation. There are 40,000 people that work in offshore wind today. So in a generation, we've built an industry. And I think for us, what we're looking at is saying, okay, and as I said earlier, there is a need to go into deeper water. Our plan, in many respects, is to come in at the development phase of projects, so to invest alongside the private sector in that. And what we're hearing from the market, and the feedback that we're getting, is that GB Energy co-investing into projects that are in development phase is a way of sending confidence to investors to continue to spend development capital, because frankly, development capital, for the reasons that you mentioned and the challenges in the market at the moment, is the most difficult capital to secure for private investors. So having a publicly owned energy company coming in and signalling that there's confidence in the technology is a powerful thing. But the other nuance in all of this is that we still think there's a job to do in test and demonstration, which I think we've signalled by our investment into the Pentland project, and then the commercialisation phase, that kind of round 1 and round 2 analogy, where you kind of build towards the industrial era. And I think there's a really important job to do to get volume into the market, to get projects that are getting built of a sensible scale, so that you can then start to pour in, the supply chain expansion in a stepwise fashion, but signalling intent into the long run. And I think that's our our plan.
Just looking at it, I mean, if you think about the market and GB Energy as being a public player in that, and what you've just said around the market saying we like the idea of GB Energy because it gives us, you know, a signal for development capital, doesn't that signal that something's gone wrong in the whole development space? And, you know, wouldn't developers much rather get a grid connection that they can develop towards and get their permitting and get their routes to market, rather than have to rely, let's say, on public money to give them the boost to continue in the fight? I
think there's two things that come across from reading that. One is that sort of describes the scenario you're describing as a perfect world, you know, of benign conditions. And in some respects, if you look back at Fixed and the journey that Fixed went through, I mean, thank goodness, you know, there was a period there where economic conditions were pretty benign. You know, interest rates were low. There were no major shocks in electricity prices, and that trajectory from AR1 to say AR5, probably AR4 actually, were like, you know, that was sort of the conditions in the outside world were pretty stable. Yes, we had things like Brexit and sort of other economic challenges, but fundamentally the economic conditions were pretty solid. Today, those circumstances aren't the same, and you know, you've got other wider things like, you know, big dramatic changes in market demand, like we've seen in the US. You know, these things have ripple effects. The other side of it, though, is that, and I've said this actually in my previous role in Renewable UK on platforms, is that one of the challenges with something like deep water or floating offshore wind is you've got to have real faith in the destination to be able to set off on the journey. And what I mean by that is, you know, the big amounts of capital investment that are required in port infrastructure, big amounts of capital investment in O&M facilities, these types of, you know, you need to dimension these investments for the long run, but recognizing that you're only starting at the beginning of the journey where the volume isn't high. I have absolute belief that a decade from now, we will have high levels of activity in deep water offshore wind. But today, many people could objectively look at me, listen to me saying that and thinking, well, show me the evidence. But you can't show the evidence because, you know, clearly we're only doing a small amount of activity in the sector at the moment. So I think that's part of the role of you know, the catalytic public investment alongside the private sector to say, look, we believe in the destination, come on the journey with us. So that's it. And let's also realise that there are big innovation challenges. You know, I think when something like ScotWind was released, I think the premise in many respects was, look, you know, this is an evolution of offshore wind. But and that you know, in many respects on PowerPoint, that's true. But when it comes to actually building a component the size of a football stadium, you know, in a week to be able to get, or 2 weeks to get kind of industrial scale deployment, you know, that's a huge amount of learning that needs to happen in theatre, as it were. And the best way to do that, in my firm view, is to build some projects.
You are listening to the ReNews podcast. For breaking news or to access our exclusive market intelligence on the global renewables sector, subscribe at renews.biz. Now, back to the show.
So you talked about the fabrication challenge there. Today you've launched the energy engineered in the UK strategy with an initial 300 million out of a plan of £1 billion, I think, pounds of funding in the supply chain. You know, if I'm sitting here as the MD of a fabrication company, can you tell me what it's going to look like? What opportunities is this fund going to present me? How do I apply? What's going to happen?
So we're releasing the Energy Engineered in the UK initiative today, which is a big part of our strategy, and it's one of the different things I think about a conventional energy company versus the publicly owned one, because we are playing a role here with some concessional capital as well as investment capital. So the scheme, we previously announced it, but today we're actually opening it for offers. There'll be an online portal. The details are all going to be on our website about how to apply, but we're targeting 13 key components that we, very much positioned at, trying to build that supply chain capacity. And there's some really innovative aspects to it. So there are areas where we're incentivizing not only the tier one investment, but actions that those tier ones take to bring in further tier two and tier three companies is more financially advantageous. So we're trying to use novel concepts to really unlock not only the big factories, but also the crucial elements of the supply chain beneath that. There are three pillars to the energy engineered in the UK initiative. The first part, as you've pointed out, is grant funding, the £300 million fund for these critical components. The second pillar is about what we're calling strategic market interventions, and I'll give you an example of that in the context of offshore wind, which is that many people in the world of deep water and floating are saying, look, there are lots and lots and lots of different floating foundation designs at the moment, and that makes it challenging for OEMs because turbine OEMs are then like, well, how do I standardize my product offering into this space? So there we're looking at how we bring a funded initiative together to bring those parties into deep collaboration that then leads to deployment in the field, trying to bridge that gap between between PowerPoint and putting something in the water. So that's a more, frankly, sometimes what we do and we don't have a great history of is as a country is anticipating the market failure and acting before it becomes a market failure. So that strategic market intervention there is we can see there's a problem. How do we accelerate the solution? And then the third pillar is that, is us investing in companies where actually equity investment would be more helpful or useful alongside grant funding. So, and I think this is particularly helpful for companies that are looking to scale up, that might have a technology and offering which is, in the, innovation phase coming up through the TRLs, and they're, where we can invest equity and help fundraise to take that company to the next level. So it's a package that is designed to be complementary and offer different products to help the supply chain grow. The last thing I want to say on this, though, and I think this is really important, is my experience when I was bringing a major foreign investment to the UK is that what the government did was signpost how to find different sources of funding and help. So if you're a foreign investor bringing a major facility or even a relatively small one, finding a location, navigating port investment, navigating permitting and consents and the various different sources of public funding is a challenge. And you're kind of left to do it yourself. What we're really passionate about in this strategy is that GB Energy, as the educated and, renewable experts or energy experts within the public finance ecosystem, are able to sort of act as the coordinator, the front door, the people who put the best offer forward for UK PLC. And we coordinate in the background with National Wealth Fund or Scottish National Investment Bank or the Crown Estate or Scottish Enterprise or, all the various different actors. We help bring the UK PLC's best offer for that investor. And, and I think that's, a bit of a game changer in terms of, helping us as a country really compete.
You referred to your experience on Siemens back in the day around Hull and that. I mean, how do you feel about those who say that at the tier one level that ship has sailed for the UK, that large scale fabrication is too expensive, labour costs are too high, energy costs are too high, the Asian, Middle Eastern players have the market sewn up, and wouldn't GB Energy's money be much better spent in the areas where the UK is strong around perhaps innovation and the services side of the sector. I mean, what's your view of that?
I think both things can be true at the same time. Look, we need capacity expansion in Europe for major components. The lead time on a transformer when we started on our journey with wind power was probably a year, maybe less. Now it's 4 years. So there's clearly a need for capacity expansion in some parts of the sector. There are a number of. It's probably right that there isn't going to be a huge, massive, expansion of, lots of factories. But for me, it's also true that the ones that are out there, we should be showing up as the UK and backing ourselves because we've got a great market. We've got, relative policy stability in clean energy. The CFD has been exported around the world as being, the sort of the gold standard of investable regimes. I'm talking there about the contract more than necessarily the process by which they're handed out. And I'm absolutely convinced that, and I do this from experience, when we started the process at Hull, it was our view that in order to compete and make sure the longevity of that factory were secured, it had to be super productive. It had to be a place where innovation was embraced. And today, well, not terribly long ago, that factory was exporting blades to projects in Germany, in the Netherlands, in Southeast Asia, because it's productive and competitive. So we can, in Britain, run brilliant industrial facilities because we're excellent at high value manufacturing. We're excellent at things like, concepts like lean. And when we do it well, we have no reason not to back ourselves. So, my view on that is, we should have a bit of belief in backing ourselves as an industrial economy. But at the same time, it's also true that services matter. There's much more value added in services in terms of a percentage. It's more of a people business. So we should embrace services as being an area where we can genuinely innovate and, where we can use more digital, where we can, we can be more predictive, where we can offer, where we can lead the world. And I often say one of these things, we know because of, we've got nearly 3,000 offshore wind turbines. We know what it's like to live with a mid-aged fleet of wind turbines more than any other country. So we're going to encounter those midlife issues. We're going to start to think about lifetime extension, and having worked for an OEM, this is where actual value, this is long-term value. So, we should really try and work out how we position ourselves to capture those challenges.
The other thing, big supply chain investments require is orders, a pipeline of orders. And that's what Siemens had back in the day, and we've seen lots of companies talk about potentially setting up here, on the proviso of securing a pipeline of orders. I mean, you're in a very influential role now, in the public sector, shall we say. We have the AR7 process. It was certainly advertised as changing the dial on offshore wind. Then we had the budget, and a lot of people in the supply chain are looking at the budget and thinking, this isn't what we expected. We expected a much more ambitious budget, and we wanted to invest in the UK. I mean, what's your thoughts on that? I appreciate you're not directly involved in the policy, but I mean, that is ultimately what is required, not public funding or investment, a pipeline of orders.
I think I would, look, you're right to say I'm not involved in this. I don't have any insight that, anyone in the private sector would have, and quite rightly so. So, for me, I think there were a number of important changes that went into this auction. And I think the best thing, CIB's longer contract, Secretary of State being able to look at the bid stack, all of these things, these are important changes. And I think the best time to assess that will be after the results and work out actually how big was this auction. It is clear, however, that for CP30 to be a success, that this auction, the one after, they need to be the ones that do the heavy lifting.
Just briefly, I mean, one thing that's not discussed so much in the plan, but which I know is of huge interest to people who will be here today, and certainly some of the listeners to this podcast, is the partnership with the Crown Estate around leasing. Can you put a little bit more meat on the bones of that and what that's going to look like and how you guys are going to play together and, you know, how it's all going to look for GB Energy?
Look, I mean, there's a huge amount of pipeline in the market at the moment, and I think that, you know, there's a slightly odd, slightly odd situation where we've got all this pipeline in the market, but then, you know, there's a question of like, well, what about leasing? I think, you know, we're working with the Crown Estate through our partnership development. There is, you know, I realised that was announced a year ago. We're working particularly at the moment, a lot of focus on the supply chain side with that, you know, how to marry up what we're doing with the supply chain accelerator program that the Crown Estate have, so that we're really intelligent and additional to one another. So there's a lot of focus around that. And, you know, the Crown Estate have said publicly that they're going to engage with the market on developing a lease towards the end of this Parliament, and we're working with them on that. So I can't say any more at this stage, but we will have more to say in the future.
If you take a step back for a minute, we look at GB Energy and its strategic plan. There is a lot of different elements to it, whether it be the onshore greenfield developer, the offshore project investor, the supply chain grant funder / investor, the community element. How are you going to pull it all off?
Look, it's ambitious, you know, and I think we ought to be ambitious. We've been given, you know, a capitalization that most startup companies could only dream of, and we're really keen to make sure that we put that to work across a number of different, you know, targets. So we set bold targets. We want, you know, the 10,000 jobs. How do we do that? Well, look, I think the best opportunity we have to drive job creation is through our offshore program and our supply chain activities. Really clear area. You know, driving at local and community is very visible. It makes an impact at local levels. Look, I was at a hydro scheme earlier this week, which a community had put together, which was, you know, it's just brilliant to see how energy is providing an impact into a community and providing knock-on benefits that most people wouldn't think of in the context of energy. So, you know, there's something really exciting that we should look to do more of there. You know, solar is making a huge impact on reducing bills for schools and hospitals. So that, you know, that means better health outcomes, better educational outcomes. It's not just about the kilowatt. So I think it's right that we have this kind of broad focus, but still have focus. So that's why we set up, you know, 3 clear priority areas. Yes, they're technology agnostic, but they are market segments that we can put entrepreneurs over the top of, drive at, you know, delivering outcomes in these spaces. And, you know, I hope that, you know, 4 years from now, we're able to look back and see the formulation of a national champion for energy that the country can be proud of.
Just finally, do you have any concerns, or what things, guardrails have you put in the event of, let's say, any conflicts or crossovers between the different elements of GB Energy? For example, you're invested in, as an equity investor, in an offshore wind project. You're talking to the rest of the shareholders. They want to make a decision to, let's say, hypothetically, invest or place an order with Asian fabricators for foundations, but at the same time you guys have a stake, let's say, in a UK factory. I mean, there is a possibility, at least on paper, for a conflicting situation there for GB Energy.
But I would say that's a reality of development. You know, I think, you know, even the private sector is developing major projects in partnerships where they're sitting around board tables and might have different opinions about things. And, you know, we'll look to use our influence. We're also realistic about how much influence, you know, that you can have in those conversations. But clearly, if someone, you know, as we bring public capital to bear in a project, you know, I think the partners that we are working with have their eyes wide open that our ambitions are very much about driving, domestic content, about driving jobs and growth, and making sure that, we learn lessons that pay longer term dividends. I think that's a really important point, that, we extract knowledge as well as immediate value that then pays into the projects going forward. So, there are obvious structural things that we have to put in place as a publicly owned company, but at the same time, it's also about how you behave and being a good partner, working, with people on common objectives, and sometimes they will run up against each other, but, being mature about how you work through them. And I just think, we will learn a lot through this process. But we will also be investing with capable and, responsible partners who've got common, aims.
I know everyone in the industry will wish you the very best of luck, Dan.
Thank you, Stephen. It's a pleasure. And let's, happy to come back if you'll have me at some point in the future.
Absolutely.
Yeah.
Take it easy.
Cheers.
The Renews podcast was produced and edited by me, Stephen Dunn. Click subscribe wherever you get your podcasts to make sure you never miss an episode. For more exclusive market intelligence on the renewable sector, see renews.biz.